Hey guys, and welcome to the Working Money Channel. So take a look at that, guys. The price of XRP is continuing to rally. We had a bit of a lull yesterday, just kind of anticipating where the price was going to go. And as of the time of this recording, we are now trading at about 51.5 cents, just over 51.5 cents. Buldy up here on Twitter pointing this out. It is breaking out now, meaning XRP, of course. Will it hit 60 cents in the next 24 hours? Very good question. I've got XRP here on the daily, guys, and as you guys can see, yesterday, a bit of a down day, but today it is now looking again like we are moving to the upside. Since we're looking at this minute by minute, hour by hour, I'm going to bring it to you guys on the hourly, and, yesterday, actually, 4 hours, probably a better chart just to demonstrate this. I was talking about this latest bullish pennant that we were forming here, and now it's looking like we are moving to the upside. So it's looking like that bullish pennant is playing out. Throw it on the 15-minute time frame. And yesterday, while taking a look at the trend, we were hovering in and around here. Is it about 24 hours ago? Because I woke up at the same time this morning, and I'm doing today's video at around the same time that I did yesterday's video. So about 24 hours ago, XRP was trading in here. We were talking about it holding this level of support. Sure enough, later in the day, it did dip down, but then did come back up, coming right back down again, holding that same level of support before we started to see the uptrend continue. So again, 51 cents. Can we make it up to 52? Let me throw it on the 5-minute just for some fun here. Now, I usually don't look at these time frames unless I'm day trading, but, the price of XRP has been moving fairly quickly. It's looking as though there's a bit of a rejection at the 0.618, at least on the 5-minute. That doesn't mean much unless you are day trading XRP, which is not my style, but to each their own. Let me throw it back here on the hourly and get rid of some of those squiggles. Actually, let's throw it up on the day. No, this is the daily. That's not the hourly, it's the daily. Let's leave it on the daily. Let's actually take a look at the most recent high for XRP, bringing it down here. So what would be next? 60 cents would bring us in and around this level down here of support. And we can see that it did also form in and around here. There was a little bit of resistance there before we finally just dropped down. So XRP possibly could get up to 60 cents in the next 24 hours as per Bull DF's question here. How strong is this trend? Is it going to keep going? This has been the question over the last week. The market cap still under $1 trillion. Bitcoin dominance still at around the same price. So it's looking like XRP is the outlier in the market. We've got Bitcoin down actually within the last 7 days, 4.35%. Ethereum is down 7.62%. And we've got other cryptocurrencies like BNB only up 0.3%. in the last 24 hours. XRP has managed to make it to the number 6 spot, guys. Right now trading up 36.55%. It just changed to 36.71% in the last 7 days. And it's number 6. Technically number 4 if you remove Tether USDT and USDC coin. Those are stable coins. I don't ever really like to consider them as part of the top 10 because they're not really cryptocurrencies in the traditional sense. So XRP number 4, if you remove these two stable coins, and it's up over 36%, guys, in the last 7 days. Now, even just going down this list, I cannot see any other coin that has moved as well as XRP. The next closest one, guys, is Algorand, up 26.35%. So another coin that I hold as well. Interesting to see, and guys, I'm starting to think that exchanges are now coming to the realization that more people are buying XRP. There is a bit of a FOMO grumbling taking place. And so I saw this from Happy XRP here, brought to me by Dawdler for XRP, and also Crypto Dash also brought this to my attention. This is a TikToker talking about XRP daily trading and how they've now actually incorporated a limit on crypto.com. And oh, by the way, I did put out that tweet yesterday, and I saw that some of you guys followed me on TikTok over there. So thanks so much for that. I'm not going to be posting here every single day like I do on YouTube, but just to kind of have a presence over there on TikTok, I thought I'd start a channel, see how it went. And so far, so good. It's looking pretty good. So if you guys are over there on TikTok, give me a follow. I'm at Working Money CH over there on TikTok. Anyway, let me play you guys this. The daily limit of XRP on crypto.com has now been capped.
Hello, hello, hello. What have we got here then? Crypto.com have just put a daily trading limit on XRP. It's getting serious, people. 24 hours ago, you could buy as much XRP as you wanted through Crypto.com. Now they're limiting you to 982,353 XRP per day. Now, I know a lot of you won't be able to afford that kind of money, but the fact that they've put a daily trading limit on it tells me that things are starting to get real. So if you're going to get in it now before the price pumps.
And that's his message to the XRP community. Get in now before it effing pumps. I mean, when I woke up this morning and I turned on my computer, I was not thinking that we were going to be seeing this pump right away, to be honest with you. I have XRP right now on the 15-minute, and when I turned on my computer this morning, we were still hovering in this level here, and I was thinking to myself, okay, I guess we can talk about, the fact that, we were hovering in the same level of support, and now we're back in that level, although we did see these ups and downs, these movements to the upside and to the downside, now still finding support. And sure enough, we decided to break out, so that is even better news. Michael Branch here also pointing this out. Okay, so CoinGate just reported that whales are showing a major transition from Ethereum to XRP. This is one of the theories. People getting out of Ethereum because of the merge. Also, Gary Gensler now coming to the table and suggesting that Ethereum could be considered a security because of the new transition. And so here's what CoinGate.com is reporting. XRP, Ripple's native token, has emerged as the biggest gainer over the past week. The recent spike in XRP price has come as other cryptocurrencies like Bitcoin and Ethereum prices have dropped significantly. There are several reasons why, as per data from Whale Alert. More than 270 million XRP tokens worth about $130.2 million have been sent from different crypto exchanges to multiple unknown addresses in the last 24 hours. The biggest purchase transactions, 54.1 million XRP, was recorded by the BITRUE exchange, and Whales bought 27.5 million worth of XRP tokens in a single go. So first, we are seeing large quantities and more frequency of these types of transactions. Why are whales interested in Ripple? However, the whale accumulation of XRP tokens has spiked since the SEC and Ripple filed their motions for the summary judgment. So there is no doubt that the lawsuit and the positive results that we've gotten over the last week have had to do with some of it, or at least had to do partially with this. According to Santiment, the price ratio of XRP to BTC went on to hit a one-year high, and the recent pump was a result of the latest filing in the case. It added that active addresses holding 1 million to 10 million XRP tokens increased since late 2022. I think they mean 2021 here. Earlier, CoinGate reported that whales are showing a major transition from XRP to Ethereum over the past week. So this has been documented by CoinGate. This comes after Ethereum, of course, made its historic passage from proof of work to proof of stake. However, XRP price has managed to jump about 50% over the last week. This is due to positive sentiment, of course. People are probably also very concerned about what is going on in the financial system. And if you know anything about XRP, I mean, I don't know if people are just jumping onto this just thinking, oh, it's a cryptocurrency that is getting clarity and I have no idea what it does, but I'm going to still invest in it because it's the only one that's got clarity. Or if some people actually have done their research, actually do know how important Ripple is going to be in a new financial system, and they're realizing, well, maybe I should invest in something like this to hedge against what is now looking like a reality, a very scary reality, guys. This from Michael Branch here. Fed aims to raise interest rates by up to 400 basis points by the end of 2022. That is like 3 months away. And so 400, he says he passed this article over for 2 days as he thought this was a typo. But apparently it's not a typo. The Federal Open Market Committee of the Fed steers the economy through periods of inflation and recession as it uses quantitative tightening and reserve easing to sustain the money supply. Therefore, a rise in interest rates caused market volatility. At the FOMC meeting on Thursday, the Federal Reserve discussed its strategy to combat inflation. The Fed aims to raise interest rates by up to 40. See, I even want to say 40. No, not 40, 400 basis points by the end of 2022. So the 75 basis point increase was just the beginning. So here I have a basis point calculator. For those of you guys who do not know how this basis point thing works, okay? 75 basis points is about 0.75%, 0.75%, which would mean that 400 basis points, guys, is an entire 4% increase in the next 4 months, 3 months, 4 months, give or take. So raising rates, anybody out there who owes money, who has debt, try to pay off your debt as soon as possible because this is looking like it is getting ugly. According to reports, the Fed increased the benchmark interest rate by 4 times this year. The rates at the moment range from 2.25% to 2.5%, according to the September CNBN Fed survey. The Fed's interest rate hike would last 11 months at its highest level. Breen Capital's chief economist John Ridling made a comment in response to the poll. So again, those are the stats, guys. I'll leave this in the description if you guys want to read further. Though 4% isn't looking very good for those that owe money. And so what else do we have here? Well, Brad Garlinghouse, he did make an appearance on CNBC Crypto World, and the entire interview is here courtesy of 801_XRP here on Twitter. I just wanted to play you guys one clip specifically. Brad Garlinghouse now suggesting that because of this landmark Ripple SEC case, that there could be a Ripple test in the future, similar to the Howey test, because he says, the Howey test just kind of misses the mark. Listen to this.
Rules. Well, so I do think, as you say, I think it's a pretty bellwether case at this point. And we talked about, the Howey test is this Orange Grove Supreme Court case from the 40s. I think that the Ripple test may be what we look at in the future. And, there are a lot of facts and circumstances that can be unique. But for Ripple and what the SEC is trying to do, I do think it's just the SEC trying to overreach the statute. And again, Congress gives the SEC power. The SEC can't just go take power. Congress has to pass laws that say, here's the framework. And in this case, what we're really talking about is the 1933 Securities Act, which created the SEC, which said if there's an investment contract, later on the Howey test. Look, we are very confident, as evidenced by the fact that we filed summary judgment. We think, again, the facts are clear. We think the law is on our side, so we want to get to that resolution. But I do think it's important for the whole industry, because if the SEC is going to be the regulator of all crypto, and again, Gary Gensler, the current chairman of the SEC, has said he views virtually all crypto as a security. That's really going to change crypto in the United States, which is the largest economy in the world. I think we all should care that we're able to continue to innovate on these technologies and build solutions using these technologies that really can make the economy more efficient.
I'm going to leave the clip there. There are multiple clips here that you guys can watch if you're interested in this interview with Brad Garlinghouse from CNBC. Notice also how he mentions that it's not up to the SEC to make the decisions. It's up to Congress, so keep that point in mind, guys, as I move through this, okay? James K. Filan also dropped a tweet thread here to the XRP community. Here is the SEC's argument as I interpret it, okay? He goes on to say, we aren't saying XRP is a security per se. What we are saying is that any purchase of XRP as a matter of economic reality is an investment in a common enterprise with other XRP holders and with Ripple. He goes on to say, whether it's through horizontal commonality or strict vertical commonality, it is investment in a common enterprise with other Ripple holders and with Ripple. So while XRP may not be a security per se, there's no other possible way to offer or sell XRP except as a security. Again, this is James K. Filan's interpretation of the SEC's perspective. And when you realize what the SEC is saying, no matter how it is framed, the judgment that the SEC wants is one that incorporates secondary sales. See the screenshot below where the SEC uses the word a purchase and all units. So just pointing us to this. First, the undisputed facts show that as a matter of economic reality, a purchase of XRP is an investment in a common enterprise with other XRP holders and with Ripple. All units of XRP are fungible with each other, and the price of all units of XRP rise or fall equally. So that is, his perspective here. James Dudley bringing up an interesting point. So when I buy a Rolex, as an analogy, well, it's not a security per se. I'm in a common enterprise with other Rolex owners and Rolex. Therefore, all Rolexes are kind of sort of securities. And Anders Al responding here, correct. If Rolex were a competitor to JP Morgan, it would indeed have been sued by the SEC for being an unregistered security. The logic is kind of flighty, I got to admit. Members of the XRP community, though, in this tweet thread are bringing up their perspective and bringing up very good points here. I'm not going to go through everything, but if you guys want a good read, definitely go in the description of the video, find this tweet, because I'm going to link it in there along with every other tweet that you see in this video. Bill at Balisarius saying, this is a big point and well put, James. It shows the cunning tactic of the SEC to avoid giving the court a need to decide if the asset XRP is a security per se, but make any sale or offer of it by any one part of an investment contract. I think Ripple's lawyers can counter the tactic. Ripple counters it by saying if there is no contract, there can be no investment contract and no common enterprise. The CDC's brief is useful on this point as it asks the courts to recognize the distinction between the asset and the transactions involving the assets. Ripple needs to win the argument. There is no investment contract either because there is no contract, or some prong of Howey, such as no common enterprise, is not satisfied. If not, XRP status may not have certainty after the case. So an interesting point there, just brought up by Bill at Balasarius 2020. Jeremy Hogan also just retweeting out James K. Filan's tweet. When Filan gifts us with an analysis, it's best to sit up and pay attention. So, just going back to James K. Filan's analysis of this. In Jeremy Hogan's opinion, Digital Perspectives here asks Jeremy Hogan, does this sound like the SEC is posturing for a ruling that could take XRP off crypto exchanges? And Jeremy Hogan says, I think they are focused on expanding their power, but I don't think the SEC is capable of over 2 years of forethought and planning like that. John Deaton mentioning James Filan is the E.F. Hutton of crypto. When he speaks, people listen, most definitely. Earl down here saying, so the US dollar, whether through horizontal commonality or strict vertical commonality, an investment in a common enterprise with other $1 holders and with the US. So while $1 may not be a security per se, there's no other possible way to offer or sell $1 except as a security. Kind of giving a bit of a tongue-in-cheek analogy here. Jeremy Hogan saying, except the XRP ledger is an open blockchain while the US dollar is as much a monopoly as there can be. Very good point here. Another analogy brought up by Sat9658 here on Twitter. Jeremy Hogan also just responding to that. So that is the analysis. Now, wanted to bring this up because this goes back to that ICE-9 theory that James Rickards brought to our attention. I did a video on it, guys, and I will link that video up here in case you have not seen it. Now, I suggest you watch that video to get a bit of context to what I'm going to say next, because this ICE-9 theory, in a nutshell, means no liquidity, markets could be frozen, and I go into detail about how that could happen. So Molly Elmore, though, retweeted out Cowboy Crypto's tweet here. This is Jamie Dimon. The clip's only 13 seconds. Let me just play it for you.
Very liquid banks unable to do what they really should be doing to help clients.
Which means you can't provide liquidity in the system at end of quarter, end of year. And so we're going to have choppier markets as a result of regulatory policies that impair your ability to make markets.
And given a quick-witted response here, Patrick McHenry, the future chair of the House Financial Services Committee, if the Republicans win the House, which is looking very probable at this point. Okay, so bringing this up with regards to liquidity in the system, this whole theory of ICE-9 brought forth to us by Jim Rickards several weeks ago. No liquidity, markets frozen, which means we could see bail-ins. And that is not a good thing. Now, Molly Elmore here actually posts a tweet thread just explaining a concept that relates to this. Could the Dodd-Frank Act force the FDIC to take over Coinbase? So this is important because we know now BlackRock is in bed with Coinbase, and Coinbase is one of the exchanges that that many Americans use to trade cryptocurrency. The recent partnership with BlackRock and Coinbase brought up this interesting question. And here's a thread explaining down the Dodd-Frank Act and how it could impact Coinbase in the event of a market crash. So just to give you guys an overview, the 2009 banking crisis resulted in $700 billion of taxpayer money given to large financial institutions who collapsed, in part from high-risk investments. In response, Congress created legislation to prevent the taxpayers from having to repeat that scenario. Number two, however, the legislation simply puts the burden on a different group of unsuspecting citizens. Large financial institutions, including investment banks and insurance companies managing over $250 billion, can be classified as SFI or SIFI, strategically important financial institutions, SIFI, okay? This is the new name for too big to fail institutions. In an event of an institution that would normally call for bankruptcy, an SIFI follows a different process. The FDIC takes control of the SIFI, SIFI, and creates a new bridge institution that is used to bring the collapsing company back to life. Assets from old companies are transferred to the new company. Number 5, the FDIC is an insurance company that supervises state-chartered banks who are not members of the Federal Reserve System. What does this have to do with Coinbase, though? Well, I first learned about the scenario from Jim Rickards, in which he refers to his ICE-9 thesis. Again, guys, if you didn't catch that video, I do suggest you watch it. She goes on to say, BlackRock is absolutely large enough for SIFI status, but does not currently have that designation from what I can tell. However, if that were to change and Coinbase was considered a part of BlackRock, this could impact Coinbase clients. If BlackRock were a SIFI and become insolvent, it would be taken over by the FDIC. The bail-in provision would be applied per the Dodd-Frank Act. This means that the FDIC could lose the business temporarily, preventing anyone from selling their crypto and withdrawing it. So be prudent, guys. If Coinbase is your main source for trading crypto, if it is your plan to use that exchange to on-ramp and off-ramp your money, just have another backup available in case this kind of thing happens. As part of the FDIC sci-fi process, a new entity would be created. Coinbase depositors would get equity in this new business and not their original funds or crypto. This scenario recently happened with small banks in rural China that had liquidity problems because of the struggling real estate market. Depositors never rushed to the bank to withdraw their funds and were given investment products instead of their money. This is the bail-in scenario, the funds from inside the institution and not the outside or taxpayers. Savvy crypto investors are aware of the risks around keeping funds on an exchange. However, the new BlackRock arrangement involves a different group. So, first and foremost, never keep your cryptocurrency on an exchange. Have a cold wallet storage solution available to you to keep your cryptocurrency safe. Again, I use the Ledger Nano. I have an affiliate link in the description. You can use it if you want. You don't have to use it. That is one of the bigger, kind of more rudimentary points here. But always have a secondary plan too, right? Have multiple cryptocurrency exchanges available to you to off-ramp, on-ramp, and off-ramp your crypto, just in case something goes south with your particular number one choice. The new arrangement brings in less knowledgeable investors via 401ks and mutual funds. They will indirectly be using Coinbase Exchange to buy crypto. Keep an ear out for the term bail-in, okay, guys? This scenario may happen in other countries with financial hardships. You may remember this from 2013, where it happened with Cyprus banks. So I'm not going to get into that particularly, but do some research on that if you are not familiar. Wanted to thank Molly Elmore just for bringing that up. Now, with regards to Patrick McHenry, obviously, understanding there could be low liquidity is funny because he also coincidentally made a comment on the Ripple SEC lawsuit. Guys, this coming from Mickey B. Fresh here on Twitter. Listen to this, an interview with the same Patrick McHenry.
Really the race is on as to whether or not the rules will be written by regulators enforcing their existing rules, or whether they'll be written by folks like Mr. McHenry here and his colleagues in Congress.
It's my hope that it's Congress that does this, because if Gary Gensler thought he had authorities to go after crypto in the way that he talks, he would have already done it, and they have not. In fact, we're sitting before the word Ripple, which is the big case that is roiled the Securities Exchange Commission and their very aggressive original approach.
Ripple, which is the big case that is roiled the Securities Exchange Commission and their very aggressive original approach.
But if Chair Gensler was capable, with the laws that exist, to do the things that he says, he would have already done them. I think it's really important that we have Congress define what's a digital asset and then separate out what is a security, what is a commodity. In all the work product from the administration, they say, we have to answer this question, and they don't answer the question because it's hard. It is now the work of Congress in a bipartisan, bicameral way to actually do that hard work to give form to the digital asset ecosystem. First step is stable coins. The next step is market structure, as you mentioned in the beginning, and then the trade-offs along the way to make sure that we actually support innovation, which is not a part of any of the solutions put forward by the administration so far. It's all bad. That is the default position. It's like 85-15 for these executive orders on this world is horrible, without really spending more time than the just 15% that there might be some benefit from it. I think we've got to make sure there's balance here, that we get the benefit of this technology here in the United States with our rule of law, our speech rights, our property rights, the constitutional checks and balances that we build into our system that we then export around the globe. I'd rather do that than having foreign imports of bad policy and bad regulation.
So boom, Patrick McHenry also saying, the Ripple SEC case has roiled the SEC. And if you guys were watching the video, the definition to cause or to be an irritation. It says over here, the watch again button's in the way here. But yeah, if I just move it here, to be in a state of agitation or disorder. So Ripple has roiled the SEC. We had Brad Garlinghouse earlier on saying, it's not the SEC who makes the rules. It is Congress who makes the rules. And we have Patrick McHenry, standing up for Ripple, realizing innovation has to originate in the United States, does not want imported technology to be running the US. And again, when addressing Jamie Dimon,
Very liquid banks unable to do what they really should be doing to help
Which
clients.
means you can't provide liquidity in the system at end of quarter, end of year, and so we're going to have choppier markets as a result of regulatory policies that impair your ability to make markets.
sounds like he knows there could be a solution to remedy this. We got to get that pesky SEC, though, out of the way. Finally, guys, just wanted to bring this up. Having a little bit of fun on a Sunday. DJ Peter Vass, listen to this. Hey, Alexa.
Alexa, will Ripple win the lawsuit versus the SEC?
Ripple Labs looks well positioned to win the case against the Securities and Exchange Commission, and it could be a massive boost to the entire cryptocurrency industry.
Alexa, do you ever lie to me?
I don't lie. I'll always tell you what I know.
Sounds like Alexa knows. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.